इंश्योरेंस अगर आप किसी से पूछोगे क्या है, आई थिंक 99% of the people will know what it is. But वही जगह पे if you ask आपके पास है, then the same 90% will say नहीं है. Within our country, it is the pricing is still cheapest. Considering the longevity that we have versus the developed countries, our prices are much cheaper even from the developed countries as far as term plan is concerned. The other yardstick which I have is this is a risk mitigation product. It's not an investment product. In case there is immense wealth within the family, then you don't need a term. Similarly, as an individual, when you are starting off, you should have a term. The ideal piece is I have bought a term plan, but I've also started preparing for this corpus.
Hello everyone, and welcome to another episode of Bazaar Beyond, where we deep dive into the world of finance, investment and more to help you make smart investment decisions. और मैं हूं आपका होस्ट विवेक अनंत। आज के एपिसोड में हमारे साथ एक खास गेस्ट हैं, Satishwar B. He's the MD and CEO of Bandhan Life Insurance. Mr. Satishwar is a chartered accountant who started his career in 2000 at ICICI Prudential. After stints at Reliance Life Insurance and India First Life Insurance, he now heads Bandhan Life. Thank you, Mr. Satishwar, for joining us. I wanted to start off with your journey. You qualified as a CA in the late 90s. You entered the insurance industry in the early 2000s. How has your journey been after qualifying CA and then now heading Bandhan Life Insurance?
First of all, thank you for having me here. It's a little bit of nostalgia here actually. So it's 98 is when I gave my exams and 99. So the results comes in the next year. So 99 is when I actually became a chartered accountant. Continued with typically the CA articleship for a while. And then 2000 is when the insurance industry opened up. So sunrise industry, right? Lots of opportunities. And my very first job was ICICI Prudential. In fact, only two companies which started up in the private space, which was HDFC Life and ICICI Pru. In fact, I joined them even before we got the R1 license. Okay. So the whole process and everything. So yes, as far as my actual work experience goes, it's only life insurance industry. So yeah, it's been a wonderful journey. I've been able to see that the entire transition from quite a few things which happened. Let it be the new products which came into existence, for example, say unit link, which was new, started only after the privatization, right? Or the innovations which happened in the processes. So various pieces over the 25 years, a lot has changed, especially the product, the way they have emerged, the process of selling. It's becoming much more convenient or much more easy to buy and understand a life insurance product, right? So it's basically the awareness has been created. But having said that, have we achieved it fully? Not yet. Okay. In the sense, the awareness still is something which we need to work upon. There's a huge gap there. The very fact that it still continues to be a push product, right? It still needs intermediation. When I say intermediation, not from a intermediation perspective, but you need somebody to explain the product both in terms of why you need it and which one you need it, right? So that still continues. So that awareness is something we as an industry are also trying to work upon. Okay. So that's something which is still work in progress. But a lot has happened in terms of the entire back end, the way you process it, right? The innovation in the form of products, right? The regulation which is now much more stabilized because we were learning, right? The entire space was learning. So the benefit of starting in the very beginning, at the very beginning of the career itself, right? This was more or less my first job. And then you are learning with everybody in that organization. It's like insurance was new for the private sector. So all the way from the MD CEO till an entry level accounts guy, right? Each one of us were trying to understand the insurance business. And especially coming from a finance background, I was trying to understand how does a life insurance company actually make money. And it's to that extent, it's a complicated business because it's a period where you actually commit for a longer tenure, right? A policy which runs for a number of years. So there is an initial cost of acquisition and it runs over the period and then you start making money over there. So initial days, one of the pieces which used to happen, like we also had a foreign partner, the very first company, ICICI Prudential, where we were working. And one of the lines which I still remember and which still continues is basically a line which said, the more you sell, the more are your losses. Okay. So that was kind of surprise because normally you will not sell at a price which is lesser than the cost of the price, right? So that learning itself was pretty. The thing is basically the product, you can't see it as a product which you have sold and immediately you start making money, right?
Okay.
The product itself takes some time. You start making money at a later part of the year. So the renewal stream which comes in, that's where the profits emerges. But otherwise, to get the customer onboarded, especially considering that it's a push product, you still need somebody to explain the products. And that needs a lot of effort. And that's the reason why the cost of acquisition is a little higher.
Okay.
And naturally, if you just compare the very first premium with the expenses, then you might see losses coming there. But subsequently, you start making money.
Okay.
So that was the biggest learning, which still continues.
Okay.
A lot has happened in terms of improving the efficiency factors.
Okay.
A bit of awareness about the products, that has come in. Innovation in products, yes. So that has happened. But yes, miles to go.
अभी आपने I think 2 साल पहले Aegon had sold the life insurance business to Bandhan. That's why the renaming of the company happened to Bandhan Life. ये transition कैसा रहा है आपके लिए? You had to steer the company through this transition. Now you have set targets and goals for your team. How have you been able to connect to the Bandhan bank ecosystem to be able to expand the business? What are the changes that you have seen, and how quickly do you think are you going to be able to implement it?
In fact, this 25 years which I spoke about, उसमें एक सबसे बड़ा change was again which happened in 2008 when Aegon was the pioneer in terms of popularizing the term plan. Right? A term plan is the most simplest form of life insurance. It's a pure risk mitigation tool where you pay premiums, very small amounts, and if I happen to die, then the family or the nominees basically get money so that the future for them is protected. Right? That's the simplest form of life insurance, but which was not a major selling product before 2008. So Aegon actually bought in this whole space there. In fact, if you remember, it was an awesome campaign called as "Kam Insurance Lene Ki Bimari." You might not be from that age group, but it's Irfan Khan with some amazing campaign, and that popular. So Aegon actually got this whole image of being a major term player. Now, that's how Aegon came into existence with a bang, and it started off pretty well. But over the years, the concentration on term, and term continuously needs a lot of intermediation. Plus, it's a little selective. It continues to be a little more selective in terms of the customer base. So you normally with people with steady income are the people who basically start understanding this risk mitigation pieces, and the income replacement is what they look at. So that base in itself was pretty low. As you know, more than 2/3 of the country's population is self-employed, right? In those years, term was more associated with salaried customer base, right? So it's like replacing your salary in case the policyholder is no longer there, right? So that's how that came in. So it was a very limited kind of a customer segment, and somewhere over the years they didn't kind of become big. So Aegon couldn't grow to a very great extent. 2024 is when within the Aegon world they also had some consolidations happening, and they wanted to exit India, and that's where Bandhan Life came in. I joined Aegon in 2019 because we were again trying to do something with a new strategy of going fully digital. Otherwise, you also had a conventional processes. But the way Aegon actually envisaged that whole space, saying the next big thing is going to be going digital, right? And that's where the whole new plan of kind of had a new set of management people coming in and getting into the whole digital space. But post-COVID, they had some consolidation to be done, and they exited, and that's where Bandhan came in. Now, Bandhan comes in. It's a banca business which is coming in, right? It's a banca distribution which is coming along with that. But the Bandhan actually is known to cater to the middle and the lower income group, right? So that again comes in, though it's basically it caters across, but that's a segment which is available through the whole setup. So that's a transition. So which we kind of consciously moved from a digital only. When I say digital only, the digital only continues, but more digital only as an enabler. Right. So normally what you get confused is digital only when you say, you normally see it as a platform, right, or a D2C business. Whereas this whole process that I spoke about, that also involves a lot of, the process is pretty lengthy, right? In that case, having digital enables you to make it more efficient and more effective. So the digital only as a platform continues, but it's more catering to the partners.
All right.
Right. So this change, plus the banca, plus a new kind of a brand recognition, which gets associated well with a larger customer base within the country, which is now we have moved not from the salaried segment, which was more the term space. We have actually started catering more to the self-employed segment, which is the larger population in India. So that way, the entire customer base has opened up, right? The brand pull is also coming in with that specific thing, and it's now allowing us to cater to a larger population.
Got it. Switching track a little, purely from a perspective, you had mentioned about first time in your previous answer, first time buyers of insurance. You focus a lot on that because that's the acquisition part in terms of the customer, in terms of the life cycle of the product. You spend a lot on that. What are some of the things that you try to focus on in terms of acquiring that customer? Because the first time buyer is the one who is a little, you said it's a push product. So you have to convince them. What are the thoughts in your mind and how do you motivate your team? What are the strategies that you implement to convince the first time buyer that this is a product that you require, especially be it term insurance or any other type of life insurance product?
Yeah, so one is the first time buyer, and the other thing that I spoke about in my earlier thing was more to do with, we call that as the new business. Okay, it can be the same customer, but buying a new product for the first time, right? So that's the upsell part of it, but still it's a new business and the renewal stream which comes in. For the first time, it's majorly a need analysis. Okay, there can be a rule of thumb in terms of a pure risk mitigation to start with.
Right.
For example, the first product normally, ideally, should be a term plan.
Okay.
Right? In case, and there are angles to it, but you start with a term plan. So you basically try and introduce him through a term. It's simple to understand, and it's a pure risk mitigant tool. But also attached to that are the various savings products. So the need analysis becomes critical for any new customer base. So one is, of course, a term plan is required if there are dependents on you.
Okay.
Right? And typically for other things also. But what the other aspects which comes in is also in terms of something which is what does the customer is looking for. Right? One, of course, it can also be, one is protection angle. The other one would be creating savings and wealth and investments, right? Now, in that case, the ask in terms of something that you need for a long-term commitment, right? That's where again insurance comes in. So what's your customer risk profile, right? We specifically get into it. So let me put it this way. In case if you're looking for something which is for a long-term specific, insurance companies are designed to work on your products from a long-term perspective. Right?
Okay.
So let it be a 30-year commitment or a 15-year commitment or like all the way a term plan, which you can actually start even at the age of 18 or 19, right? All the way till 75, 85. So that's the kind of commitment which comes in. Similarly, savings product in case if you want to accumulate wealth for your retirement, right? That's again a long-term commitment which comes in case we can actually have even a guaranteed product which runs for 30, 40 years, right? In a falling market rate scenario, we might want to secure that. So it kind of, or let's say another product, this is the only product which can ensure that kids' education, for example, I just became a father, right? And then I know that my kiddo will need funding when she's say 15 or 18, basically based on the career that she chooses. And I need to start creating kind of the corpus for it. Insurance again helps you build that long-term focused area because we as an investment management piece are more focused on long-term. Even in case of mark-to-market instruments, our philosophy is always the long-term philosophy, right? So the products, when we do the need analysis, the guidance is always saying it's a long-term need that you're catering to. It's not something which you need it over the next 1 or 2 years. In case you're looking for something over the next 1.5, 2 years, this product is not the product. There can be a specific term product. For example, if you're if you've taken a loan, a 3 or 4 year loan, you can cover it through a shorter term, a term proposition, right? For example, it's a 3-year loan, right? And if something happens to the policyholder, say at the end of the 15th month, right, the family is not burdened for the repayment of the loan, but that is taken care of by the insurance company. So those are risk mitigation. Those are the smaller propositions. But otherwise, as a retail customer, normally you are looking at longer term propositions being catered through life insurance. Either it can be term, which basically takes care of your entire earning period. if something happens to the policyholder during this earning period, the nominee or the family is basically protected from at least the financial burden. Similarly, savings product, I want to ensure that there is a corpus being made available while she is 18 or 19 or 20, whenever she wants it, right? Even if I am not there, I can still ensure that the corpus is getting created for you. So there is this protection element which also helps with that. If you're working towards a pension, you need something which can stay for a longer one. So both the regulation plus the investment philosophy, right, caters towards that. I want to secure, I am of that type where I want to know what is the exact amount that I will receive by the end of so many years, right? Mark to market, yes, but I am of that type where I want to secure it. Then you have a guaranteed product which actually talks about 18, 20 years or even 30 years, right? Similarly, but I am a guy who basically believes in the entire mark to market space or the equity space, and I'm okay to take that risk, right? So there again, you can have the ULIP proposition. So it's more not just a single focused on saying this is the product that I want to sell, but it's more trying to understand from the customer or the need analysis, both in terms of what his need is, what is the goal that he's trying to protect, and two, what is his investment philosophy or his risk appetite. Based on that is the product proposition concept.
आपने लॉन्ग टर्म के बारे में बात किया in terms of the savings products, how people focus on that. In the past 3-4 years आपने देखा होगा कि इक्विटी का जो पॉपुलैरिटी बहुत बढ़ गया है. Has that had any kind of impact in how you pitch the products to customers now in terms of the industry per se, not just Bandhan? Because that is a screaming competition for long-term money in terms of investors' focus at least. How have you seen any impact? I mean, just
this is if you actually study the industry, ये काफी evident है in terms of the product which is being sold. I won't say it's my pitch or the industry pitch. It's more the customer awareness around those spaces come in, and now his own ability, because he starts understanding this space, his ability to take a more equity kind of product, which also has a risk component, but the awareness in terms of, yes, I can, if I'm actually committing for 11, 12 years, I can take that risk, though it's not guaranteed, but I believe in that whole space. So that awareness has gone up pretty well. And that's the reason why you're seeing the product mix. Also, you will see a larger share coming through mark-to-market products, the ULIP products within the insurance space. But there is also a specific customer base which is looking at guarantees. Right? For instance, I was just studying somewhere. So there are people, the philosophy can change if you have seen the 2008 crash. Right? If you have started investing post 2008, you have never seen a crash, right? You still believe in this whole space. So these things also play, right? I have actually seen those during the college days. I have seen the 93, 94, the crash which happened that time, right? We actually saw everybody suddenly got into equities directly, and we actually saw even suicides. I was in college at that point in time, right? And because suddenly people felt it's quick money and they kind of pushed in a lot of things. But those people, most of them would be retired by now, but that's the kind of scene, if you have seen it, you would still want to secure some aspect into the guaranteed component. So it's also your own experience over the years based on which you will decide. So we are seeing a lot of people, again, open to now basically looking at equities and open to taking those risks. And that's how you will see also the product mix within the life insurance business is also seeing a lot of mark-to-market products, which is ULIPs.
Got it. I wanted to ask one question about composite licenses. We've been here. I mean, I've been reading about it a lot in the news and trying to understand. I mean, what would it mean for the customer, any customer be it a general insurance product or a life insurance product? How do you see this changing the customer's experience per se?
See, the composite license allows us to club products in a much better way. Okay. As a manufacturer. Okay. For instance, say life and health goes together. Okay. Life and health are also in a way risk mitigants for each other.
Correct.
Right. So we, from a product design perspective, that gives us a much wider kind of a canvas to paint. Right. So you can actually design products on a much more. You can bring in much more innovation there. Right. So those are the things which comes in once you get the composite license. Okay. From a customer perspective, he's naturally, because this innovation can come in, these products can become, and hopefully it happens, which is still being designed and thought through, that the prices are much more competitive.
Okay.
So both in terms of for as a manufacturer, because now you're getting a larger ability towards much more new products and therefore distributing them, right? The economies of scale will also play a role. So multiple benefits. Purely from a customer perspective, this benefit of clubbing two products which are otherwise opposites, right? But they actually play a role. For example, a healthy guy, my ability to write the term plan becomes much better, right?
So be cheaper, so to speak, if it's a healthy person. For the end
I'm
customer
not that
perspective.
basically saying. See, the term plan, the claim amount comes in only when death occurs. The health plan actually delays that space, right? If something happens, there is health, there is your ability, because your access to health is much better, or basically the health facilities is much better in case if you have a health plan, right? So that allows the longevity of a person also goes up. Thereby my ability towards term becomes much better. So this product can play a role with each other.
Okay.
Right. And that's how by clubbing those products you can kind of bring in much more better economies of scale, pricing benefits can come through. But it is still at a very preliminary stage. When we try to put pen to paper, it's still because there are multiple complications. Because your health is not a level term product. Right?
Okay.
It can be, but then it's a huge commitment from the insurance perspective, company's perspective.
When you say level term, what do you mean by that?
So, for example, when you buy a term plan, right, you are buying a 40-year plan or a 30-year plan.
Got it.
But you pay the same premium all the way when you were 30 year, right? Your age was 30, and even at the age 60, you're paying the same premium, right?
Correct.
Though the risk angle at age 30, the chances of mortality, which is the death, is much lower than at age 60 or in age 70.
Yes.
But the premium remains the same. Now,
Yes.
that's called as a level term.
Okay.
Right. Whereas health, you can change the premium every 3 years, 4 years, or even very next year.
All right. Good. Sir, एक और सवाल ये बीमा सुगम के बारे में it was supposed to come by mid of this year, but it's still in the works. What can a customer expect if that is implemented from interaction with, say, an insurance advisor or, say, a company like Bandhan? What could change for a customer? Because I kind of feel like it's like the UPI for insurance, because we are trying to make digital stacks for various industries so that efficiencies of scale comes from the get-go. Is that what it is going to be? Can you just give us like a bird's eye view of perspective of how it might change?
So BimaSugam, it's still under works, and it's a industry initiative, right? The insurance companies have come together, both life, non-life has come together and creating this platform. It's a platform where everything is integrated.
Okay.
Right. So as a customer, if you have multiple policies, you can see it at that place. Right. Multiple policies with multiple insurance companies can be visible over there. As a distributor, rather than creating my own different platform, I can plug into BimaSugam and start selling.
Got it.
Right. As a life insurance company, I can showcase all my products in that platform. Right. So rather than having, as it's a tech platform which is more democratized, right? So it is something, rather than having multiple one-on-one relationships, you can all plug into that one space, right? A distributor, in case if he chooses up to sell for multiple insurance companies, it can still integrate through that one platform.
Got it.
Life insurance companies itself also gets a lot of benefit because you don't have to end up doing multiple integration. And it will also be a marketplace. Sooner or whenever it comes in, it will also be a marketplace where customers can go and buy a policy directly over there.
Okay.
Right? So it's an industry initiative.
Okay.
So that's how it's coming in. It's still under works. So the more it's yet to evolve. As you know, it's a huge, because we are talking about all 23 plus life insurance companies and some 40 odd GI plus health insurance companies, all of them to come together, that itself is a task. So in terms of the platform and the API integrations to happen.
Okay.
So that's what is under works.
Okay.
Hopefully it comes somewhere this year.
Got it. Last year there was some proposal about change in surrender value rules that for life insurance customers. There was a lot said about it. I mean, I just wanted you to explain for our viewers कि ये क्या rules थे And what was the impact expected by the industry, and what is the status now, and what should the customers understand from these rules?
So this came into effect 1st of October last year, 1st of October 24, right? So the policies before that and the policies after that, the policies after 1st October, the surrender values are much higher. Now, what do you mean by surrender value? Is basically if you want to discontinue a policy, right? You have been paying premium, say, for 1 year, 2 years, and if you want to discontinue a policy, then the surrender value is the money that you will get, right? As a life insurance company, you are committing a 30-year, 20-year, or a 15-year kind of returns for the next 15 years, right? Now, that's a commitment which also requires a lot of asset management at the life insurance company's end, which is basically buying long-term papers, right? We'll have to there is a back-to-back arrangement. If I am committing you a return of, say, 5.5%, 6% or 7% over the next 15 years, I also need to ensure that that's what is called as the asset liability management, right?
Correct. For that plan, you have to invest so that
correct. So that whole space
obligations can be paid. Yeah.
Correct. So that I am generating that kind of money when the maturity comes in.
Correct.
So you end up actually investing in long papers and all those things.
Correct.
Now, suppose if you surrender, I will have to actually curtail this long-term investment that I've done.
Correct.
And I'll have to basically generate money, so I'll have to sell this off. And that happens at a loss.
Correct.
Now, that is where this whole space of the exit was a little difficult in terms of surrender before that. Now, it's a little better.
Okay.
So, anywhere in the range of some 50 to 60% of your premium now comes as surrender, even if you want to exit even the very first year itself, right? Now, that is what is coming. So, the product has become much more, because emergencies can happen. You don't, normally when you're buying a life insurance policy, you're buying it for a longer term.
Okay.
You're buying, because that's a very conscious call. But emergencies happen and you need some money, and this is naturally your money that you want to get it back. So that is where this whole regulation of basically making these surrenders a little better. So that in case even if I want to exit in first year, there is some value coming out of it. So that's where it came. Naturally, this was a huge change from an industry perspective, because you also had to then align our investment philosophies on those lines, which is now in place and which is very much kind of working well.
All right. So, I did research about some of your plans, and microinsurance is one of the focus, like to democratize insurance also beyond, like, say, tier 1 cities. How do you think, I've heard of this microinsurance before also, but how can that work in life insurance also, or does that work only in other general insurance products?
No, so microinsurance, and again, microinsurance, which we call as a credit life product, right? Or in simpler terms, a cover or a life insurance product which is attached to a loan.
Got it.
So that in case during the loan period, if the borrower is no longer there, right, the family is not burdened with repaying the loan.
Got it.
Right. So that's the loan cover. You can call it simply that way. That exists, and that works wonderfully well. So that has been a major piece. So in the life insurance space, that is one of the microinsurance products. Which
credit is protection.
It's a credit product. Correct. Right. So that's a product which perfectly works. We are trying to figure out, or we are trying to actually come up with a product which is a retail product within the microinsurance space.
Okay.
Right. Which provides a lot of flexibility, because there the whole income stream itself can be, it's not consistent, right? It's not that I get this money every month or every day, every week. So there we are trying to bring in a product which is basically a savings product under the life space, which provides some bit of cover, but it also provides you some bit of return on that thing. And it gives you the flexibility in terms of whenever you want to buy, you can buy. Or whenever I have the money, I kind of start investing it, right? So that's the space that as an industry or as a life insurance company, we are all trying to, because that's a huge base within the customer. There is a customer segment available, right? And that's specifically a segment that we want to cater to. So this is one product that we are trying to build in. So Protect, yes, it's working pretty well. Credit product, which is attached to a loan, that's working pretty well. This is more enabling people at that level to have some kind of savings generated and can be withdrawn. So bringing a lot of flexibility. As I said, life insurance is more a long-term commitment, right? In this one, we want to do two things. One is the flexibility to invest as and when you can. Right? That's a big deviation or a change from how we normally design a product. Two is you can also withdraw when you can without any major charges to it. So this brings in a lot of change in the back end to manage, not in terms of technical aspects, but more in terms of the investment philosophy, the investment management part of it. Now that's the solution, or that's the product, or that's the process, or that's the the challenge that we are trying to solve for. Okay. The moment that comes in, we intend to launch something similar by end of this year.
Got it.
Where we get something where and it's also a huge logistics process, right? The collection has to happen at the customer's doorstep, because he's working. For him to come to the insurance company's office and then collect can become a little difficult. So the existing logistics on those pieces, all those things can become a critical one, and that's what we are trying to solve for.
Does it? From my understanding, I feel like the Bandhan customers will be more amenable to buy such a product. Is that true? Is that the right assumption to make from you?
There is a customer base, and that's the reason I said we want to launch it by end of this year. Mm-hmm. There is a customer base within the Bandhan Bank who are in that segment, right? And for them, this proposition kind of will work very well.
Okay.
So that's where we are starting. But having said that, there are multiple places where this kind of process or the partners exist who can help us actually take this product to the end customer.
Is it more oriented towards, say, a self-employed person, or is it even salaried folks can afford, like you're focusing on them?
It's more focused towards low-income group.
Got it.
Okay.
Got it.
Naturally, within that, you will find normally most of them to be more gig workers or freelancers.
Okay.
Right.
Okay.
And thereby, the consistency on income is a difficult one. For salaried people, you know that this is the money that I'll get at the end of every month, right? So your commitment can be much better. Mm-hmm. But for the self-employed, the commitment becomes a little difficult, and that's the reason why they always shy away from these kind of product, right? Because if I have to tell them that you have to give me, say, a 500 rupee every month, no, that's a commitment. That becomes a little difficult. But if I can tell them that, okay, you give me 100 this month, you give me, whenever you have it, you're going to give me 200 next month, right? Or come back to a 50 over the next month. So that flexibility gives them a lot of confidence that they can actually continue with it. Mm-hmm. And that is the space that we need to solve for, and that's what we are trying to do.
Got it. One thing about, you had spoken about how folks are not familiar with the term insurance product a lot. I mean, even though it's a plain vanilla, very affordable product, a lot of folks don't opt for it. I mean, Indians generally want a guaranteed savings product. They usually gravitate towards that in terms of a life insurance product. So because there is no term protection, the kind of insurance insured people is still lesser than, say, a lot of benchmarks globally. So the penetration is considered to be low because of that. But if you see all the other savings products, the penetration is quite higher. Why do you think that there is a lopsided nature there?
There are two ways of looking at it. Mm-hmm. One is we actually measure penetration and the premium segment. Right? When I say premium, the amount segment.
Okay.
The average ticket size.
Okay.
Right? So a savings naturally is much bigger from a ticket size perspective than a term plan. Your term plan, say, is what? 10,000 rupees or 12,000 rupees a year. Right? Whereas savings, you will normally get into 50,000 or 60,000 rupees. Or even if you do a 10, 15,000, that's a pure savings plan. This as a GDP, because you're looking at the premium. For example, the average ticket size of, say, a savings plan could be, say, 50,000 rupees. Right? Against that, it's one policy. Mm-hmm. And if you look at a term, which would be, say, even at a 15,000 rupees, it's close to 3 policies. Mm-hmm. Right? So if we convert that into number of policies, term will not be that bad.
Okay.
Right? But when you convert, basically measure it as a percentage of GDP in amount basis, naturally savings will be much bigger. Mm-hmm. Having said that, the penetration of term within our country abhi bhi bahut kam hai.
Achha.
Okay. Now usme one of the saying, it's not just it's the most simplest of the product, right? It's simple saying, if the policyholder dies, the nominee, the family gets money, right? Which takes care of the financial strain which the family will have to incur in case if the breadwinner is not there. There is no complications. Everybody understands that. Bollywood uses it majorly, right? So insurance, agar aap kisi se puchoge kya hai, I think 99% of the people will know what it is, right? But वही जगह पे if you ask आपके पास है, then the same 90% will say नहीं है. My philosophy around that is हमेशा कोई और मरता, मैं नहीं मरता.
Yeah, there's a problem with people to think that.
That's also the reason it's a push product, because I don't want to talk about death.
Correct.
Which is fair enough, right? And that's where a very innovative ways of communicating it and various other things, which is still on and which still continues. And that is where I said when Aegon introduced term plan, that was a very innovative one. Come insurance lene ki bimari. He actually spoke about that you have an insurance through the savings plan, but it is not big enough, right? So kind of communicating, saying you need a much bigger term plan. It's in fact within our country it is the pricing is still cheapest. Considering the longevity that we have versus the developed countries, our prices are much cheaper even from the developed countries as far as term plan is concerned.
Okay.
It's very well
How do you
priced.
determine like the cheap, whether it is affordable? I mean, just to understand in terms of benchmarking with the other
No, so
countries.
if you say the same, convert for say a 50 lakh cover, the price that you pay here versus the price that you will be paying in any of the developed countries is much higher.
Okay. Okay.
Right?
Okay.
So the purchasing power parity is a little different one, but the absolute sum assured to the term, the premium, is much lesser for in our case.
Okay.
So that's the space. So this piece is more awareness. When I say awareness, not awareness what life insurance is, awareness in terms it's a risk mitigation tool and it can happen to anybody. Normally, and this is another learning which I learned the hard way, is for a salaried guy, it comes in naturally because if the salaried person is no longer there, the income stream stops, right? And the family has to suffer. But that again for self-employed, and self-employed, the simplest of example which I will take is a Kirana store guy. Okay, for them, and this actually happened with me when I spoke to this person saying, "Why don't you buy a term plan?" He's saying, "My business is my term plan because even if I am not there, my business continues and the family will kind of the revenue stream comes in, so it's okay. So my shop is my insurance." And I actually bought that explanation at that point in time, and this is pretty early. But this instance which happened with me was this guy, his family, right? His son was in Taken Commerce and he was pursuing CA, right? And a very good guy. He used to I was also a chartered accountant, so he used to take advice from me and used to discuss. Very bright guy. One sudden fine day, the head of the family who was running the shop, he kind of expired. And this individual, this young guy, had to take over that business. And considering how the time it takes to do your CA, right, he had to stop it.
Okay.
Now that's where I felt, earlier I felt, your house is your insurance, it takes care of it. But a child's education is getting compromised, right? Because these are certain pieces. We had to actually move away from being a very bright student, having a wonderful career in terms of becoming a chartered accountant and moving into that space. He had to stop it and move into that space. Fortunately, at a later point in time, he's still continuing to do that, trying to do it. But he actually lost a good decade in that space. So anything of these, we don't think about this one, but anything on these lines can happen. It's a very small cost to kind of secure that nothing of this sort happens.
What do you think is the right age someone should buy a term insurance policy? Is there a right age? Can there be a right age?
It's sooner the better.
Okay.
Now, what do I mean by sooner the better is there is, of course, a commercial advantage. If you buy it at a younger age, the pricing is spread over a longer period, right? And that's the reason you will find your per year premium is much lower when you are younger. The more closer you kind of become, both in terms of the spread becomes lesser. So, for example, if you're buying at age 20, you get, and if you're buying it till, say, age 70, right, you get a good 50 years where the premium is spread over, right? So, naturally, the premium will be much less. But if you're buying at age 40, right, so it's got only 30 years. Naturally, that will again become a little, because it's all level term premium. It's spread over the number of years that you're buying the policy for. But my yardstick is, especially the term plan, if you have dependents on you, right, you should have a term plan. Now, this dependent it's not necessarily again only the breadwinner kind of a dependent. This can also be the homemaker. The homemaker also has some dependents, not necessarily commercially, but the homemaker is enabling the breadwinner to go out there and work, right? If something happens to the homemaker, this whole disturbs the equation. We can't actually take care of the emotional aspect there, but at least the financial help can come through. The breadwinner is definitely a clear case, right? Because the income stream stops and you need somebody or some money to take care of that, right? That's where that comes in. Similarly, even a student, right? The parents have invested a lot. It's not that they're dependent on the kid to kind of repay that space, but that whole space, that immediate angle, in case if there is something. So that again, a student also should buy a term plan in case if that's the kind of thing. The other yardstick which I have is this is a risk mitigation product. It's not an investment product, right? So in case if you are, there is immense wealth within the family, right? Then you don't need a term, right? So you don't have to do that. Similarly, as an individual, when you are starting off, right? One is, of course, you should have a term so that because you will have not yet created a corpus immediately in the very first 10 years of your working piece, right? So there is no wealth which is yet created which can take care of any such eventuality, and that's where the term plan comes in. But the ideal piece is I have bought a term plan, but I've also started preparing for this corpus. So by the time you are at, say, age 45, 50 or 60, you should have created enough corpus that you should say that I don't need a term plan.
Correct. Okay.
So you can buy a term plan till age 70 so that it's largely your working years plus something in case just you decide the longevity is improving and you might want to work till age 70 or something like that. You can continue to do that. But if you have created, the objective will be into parallelly create corpus. And if you have created enough corpus, don't discontinue the term plan at age 50.
Okay.
So the whole purpose of there is this clause called as basically you can with return of premium which is coming in, or rather it's an exit plan where the insurance companies have also started paying the premium back, right? Suppose if I buy a term plan till age 70, I have an option to exit at age 55, age 60. Okay, and the insurance companies actually pay the premium back.
It's like a rider I can add, right? Like
no, it's now largely in the term plan it's inbuilt now.
Oh, is it? Okay.
Because it's coming in from across. So we call it as a special exit value.
Okay.
But you have to opt it at that point in time.
All right. Initially, okay.
Not
when
initially.
You opt for buy
initially.
the product.
Not even have to do that. The product has its inbuilt feature.
Okay.
At age 55, you'll have to opt for it.
All right.
You can't do it at age 69. Suppose if I bought a policy till age 70, right? You can't opt in saying 69, there is only 1 year left and let me exit. No, that doesn't work. So the option period is limited to 2 or 3 years at age 55. The objective is you should have created enough corpus by that age that you don't need life insurance and you can leave it. Right?
Got it.
So the ideal way, yes, initially you have not yet created corpus for yourself. There are dependents on you, both financial or non-financial. You should have a term plan so that it takes care of it. In parallel, we should start creating wealth for ourselves.
All right.
Right?
All right.
And the very fact that it's basically the compounding plays such a huge role that by the time, if you start early, by the time you're age 50, the money that you would have created as wealth is huge.
All right.
Right. So that should take care of whatever eventualities happen at that point in time. And you can basically decide also to discontinue the term plan. And now the insurance companies actually also gives you an option to, which will not be a huge amount because the premiums that you're paying it's pretty now, but you always have a special exit value at age 55 or age 60, right? So the ideal one, buy it immediately if you have dependents. If there is no dependent, then when I say dependent, it's both financial, non-financial. If no, then don't buy it. If you have dependents, please buy it. But in parallel, start creating a corpus. That should take care of eventualities. The best solution is basically I have created enough corpus for myself that should take care of any eventuality. Till that time, I need insurance.
Fair enough. Last question. Over the last few years, some changes in tax laws have not disincentivized life insurance products, but that ATC importance has gone down. A lot of people have switched to the new tax regime in terms of personal income tax. So has that had any impact in terms of sales? Because I remember when I used to track the insurance industry, a lot of, during the management conference calls for a lot of the listed companies, they used to say that the insurance, like say term protection policies and all, they used to get bunched up in like a couple of quarters, whether it is Jan to March or say September, post-September onwards. That's where the bulk of the business used to be booked. So has there some 10 changes that have happened because of this? Have you seen any?
No. So again, the product innovations and various other things has actually made the product itself quite capable. Right? You don't kind of necessarily need that kind of support. If that helps, especially considering that our social security is yet to reach a specific level, any insurance product comes in, and thereby I would still expect a support from a tax exemption or tax incentives, which will definitely help, not just the insurance companies, also from an individual customer perspective, much more promoting people to have that kind of a product, right, just to take that risk mitigation angle. Having said that, the whole space of JFM, or January, February, March, right, that's the peak season for us, that still continues. It's more because I think over the years it has kind of got into that space, and we still get good 30-40% of the business coming in the last quarter, right? So that continues, and it's somewhere that whole energy comes in or whatever happens, but then the last quarter happens to be a big one. But the product themselves are kind of has immense value, that they still, this proposition, which again we are talking about, this is the ultra HNIs who will not get into that space, right? So the caps that has been brought in. But otherwise the product still continues. It's largely, majorly caters to the middle income group, and it's a wonderful value proposition. And it actually has multiple options in terms of both participating in the market, or I want to more secure that this is the money that I will get and I'm sure about that, which is the guaranteed products, or an immediate income product. So anything which basically has a long-term objective, I think insurance products caters that objective very well. And which is where you will still, yes, there is some kind of a blip, but it still holds on its own.
Thank you so much, Mr. Satish, for speaking to us. It was a very insightful conversation about insurance. Thanks a lot.
Thank you very much.
तो ये था बाजार एंड बियॉन्ड का आज का एपिसोड. आई होप कि आपको ये एपिसोड पसंद आया हो. मिस्टर सतीश्वर ने हमें समझाया अबाउट हाउ टू लुक एट अ प्लेन लाइफ इंश्योरेंस प्रोडक्ट, यानी कि टर्म प्रोडक्ट. जब तक आपके फैमिली के लिए आपने कॉर्पस जो बनाना था बनाया नहीं हो, तब तक टर्म इंश्योरेंस हेल्प्स यू टू रिड्यूस द इम्पैक्ट ऑफ एन इनकम शॉक ऑन योर हाउस होल्ड इन केस ऑफ एन अनटाइमली डेथ. अगर फ्यूचर में कॉर्पस बन गया हो तो टर्म इंश्योरेंस प्रोडक्ट के रेगुलर पेमेंट्स आप रिकंसिडर कर सकते हैं. अगर आपको ये एपिसोड पसंद आया हो तो वीडियो को लाइक करें और अपने दोस्तों के साथ ज़रूर शेयर करें. ऐसे ही और कॉन्वर्सेशंस के लिए mStock के यूट्यूब चैनल को ज़रूर सब्सक्राइब करें. मिलते हैं अगले एपिसोड में. तब तक के लिए स्टे सेफ एंड इन्वेस्ट वाइजली.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.